Hey guys, thanks for joining us again on this week's edition of Mortgages Made Simple. My name is Monica Brito, and I have been in the mortgage and real estate industry for the past 15 years, and this is my friend Keia Blake. Say hi,
Hey.
Keia.
Hi. I've been doing closing loans for about almost 12 years now.
Awesome. So today we thought we would talk about a subject that a lot of people ask us about. It is, what is PMI and MIP? Nowadays that we see a lot of people, in fact, I think you were talking about it earlier, Keia, that about 72% of people don't put 20% down on their loan.
Mm-hmm.
So if you don't put 20% down, you have to add onto the loan or onto the monthly mortgage, PMI or MIP. PMI is private mortgage insurance, and it is it insures the lender in the event of the default of a loan. So can you kind of explain the differences, Keia?
The differences between what?
Oh, like why would you get PMI? I mean,
okay.
What is...
Sorry. I misunderstood your question.
that wasn't a good question, actually. How would you, what are the different factors as far as determining how much PMI
Okay.
costs?
So with FHA loan, the percentage is pretty much like if you're putting down the minimum 3.5%, it's 0.85% of the loan amount. There you can get as low as 0.8%. I believe that cutoff is 10% down. But with conventional, if you do a conventional loan, the factor is based off of your credit score and the amount of money you're putting down. So it could be anywhere from, like, I think I've seen it as low as about 0.3%, as high as up to like 1.5% is probably about as high as I've seen. Usually if you're getting into the 1.5%, you should probably just go with an FHA loan. So yeah. And then on rural loans, it's a set percentage as well with like FHA. So
awesome. So I know we talked before, you know, unless you have 20% down, you're going to get either a PMI or MIP. The only exception to the rule on that is a VA loan. So that's the only one that doesn't have PMI or MIP.
Correct.
Now, can you tell the difference? Because I know some clients have asked for them to get a loan that doesn't, that you don't have to pay that, but that they would rather just include it in their mortgage. Is there a way to I know there's a way to do that, but can you explain a little bit more about that?
Yeah, so there's LPMI, which is lender paid mortgage insurance, and basically it's built into your interest rate. Typically I'll price those out. The interest rate is usually at least 0.25% higher than what it would be without doing that. I have seen that the APR is a little bit lower when you do the LPMI, but that's over the life of the loan, would be better for you. So it's kind of just down to what you want your house payment to be, if that LPMI helps you, or if it's better to just leave the mortgage insurance on there. The other thing is with the LPMI, you would have to refinance out of it if your house had 20% equity to drop that interest rate down. If you have mortgage insurance on a conventional loan, it's possible once you hit 78% loan to value to have that mortgage insurance dropped with your lender without refinancing. So
that's actually a good point, because that's something that people should know too, is if you get an FHA loan or the LPMI that you know, or a USDA, that all of those you have to refinance out of them.
Right.
You can't just, you know, that's the beauty of the conventional loan is once you do get to that 78% loan to value, you can just drop it with an appraisal. So that's actually a really good point. So I think this kind of boils down to when you're looking for a home or you're looking to refinance, that the best bet is to contact a loan officer to evaluate your situation, you know, individually. And that way we can see kind of what's going to be the best overall for you.
Okay. Yeah, exactly.
Cool. All right. Well, thanks for joining us today. And we will be back next week with more content. And we're trying to do this on a weekly basis so that we can kind of simplify the mortgage process for you. So thanks again. We'll see you next week.
Yeah.
Thank you so much for joining Keia and myself today. Our goal is to help you make the mortgage process simple. If you're ready to apply for a mortgage loan, or maybe you're thinking about buying in the near future and want to see what you can qualify for, go ahead and click on the link below and apply today. Please be sure to choose either Keia Blake or myself, Monica Brito, as your mortgage loan officer. If you have any further questions, please feel free to reach out to us via email. Our email addresses are posted below. And if you would like to follow us on social media, you can follow us at the below handles either on Facebook or Instagram. If you like the information that we're giving you today, be sure to like and share, and we will talk to you soon.